Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala ali wa sahbihi ajmain. Distinguished guests, ladies and gentlemen, Assalamu alaikum. Good morning and good afternoon, and welcome to our webinar on Islamic finance liquidity amidst a pandemic. My name is Mustafa Adil. I am the head of Islamic finance for data analytics at the London Stock Exchange Group, formerly the head of Islamic finance at Refinitiv. And it gives me great pleasure to welcome you all to this webinar today. I will be your moderator and your master of ceremonies. Ladies and gentlemen, the last year has been an extremely challenging year for all of us. The COVID pandemic has led to 2.9 million deaths, 132 million infections, and has truly affected every one of us in some way or another. And our heart, and we must always take time to reflect on the fact that this health crisis has had such a tremendous emotional and personal and social loss for so many of us. But we are heartened by the fact that the vaccination program is going well. To date, over 378 million people around the world have taken the first dose of their vaccine. And with rates coming down in various parts of the world, we hope that we will come to a post-pandemic era soon. But our thoughts and prayers are always with those who have lost loved ones to the crisis and to the doctors and nurses that are fighting this pandemic on the front lines. What started as a health crisis very, very quickly evolved into an economic crisis and then to a commodities crisis. We saw significant economic impact and GDP declining in many, many countries around the world during the second and third quarter of 2020 and consistently rolling throughout the year. It was an extremely challenging and an unprecedented crisis. But with that came an unprecedented stimulus package as well from governments. Governments spent over $10 trillion within the first few months of the pandemic to try to stabilize it. That's 3 times the amount that was spent to deal with the 2008-2009 financial crisis, and have since then continued to spend money and continued to leverage fiscal and monetary policy tools to try to ensure that they mitigate or minimize the economic impact that the crisis is having on us. Now, what has happened is that this has resulted in a very interesting, and some would say a new economic paradigm in which we are all operating. For the first time, we are seeing interest rates at record lows, and with the expectation that that will continue into the medium and long term. And we are seeing a lot of liquidity being pumped into the financial markets by the central banks around the world to ensure that there's no liquidity crisis. This is truly unprecedented times for many of us. And it's very interesting to see how financial institutions, particularly Islamic financial institutions, would manage and thrive in this current economic environment. And that's why we want to focus on Islamic banks, on the Islamic finance industry, and in particular, the treasury function, which many say is the lifeblood of Islamic banking institutions that keep the wheels churning in all the different areas of focus or departments within an Islamic institution. So we really want to understand, what has been the impact of the crisis, of the economic crisis, and the post-stimulus period, and what is expected to happen once the pandemic subsides, once some of the stimulus support is pulled back, and how the financial institutions are going to tackle this. And to address some of these questions, we are truly honored and privileged to have a fantastic panel of experts with us today to go through this. And I would like to just take this opportunity to quickly introduce them. We have with us Anna Kristanti, who is the Group Head of Treasury and International Banking at Bank Syariah Indonesia, the largest Islamic bank in Indonesia, which was recently formed by the merger of 3 separate institutions. We have Nabil Ali, who is the Division Head for ALM and alternative investments in the Islamic Corporation for the Development of the Private Sector, ICD. We have Mr. Muhammad Al-Duwaila, who is the Deputy General Manager for Treasury at Kuwait Finance House. And we have Hussein Al-Banna, who is the Head of Treasury at Bahrain Islamic Bank. Thank you very much, ladies and gentlemen, for being here with us today. Before we start, I just want to go over a few ground rules very, very quickly. We want to keep this an interactive session, and we would like to definitely tackle many of your questions. Within the toolbox, you will see a Q&A box. If you select that, you can direct questions to the speakers, and I have access to those questions, and I will ask the speakers your questions, and we'll make sure that we try to go through as many of them as possible. You can access it at the bottom of your screen, along with the toolbar that gives you access to various other things like settings. If you need help for the from any of the organizers on technical issues, you can click on the help box there. You can view the presentations, and you can view the webinar materials as well. So please keep your questions coming. Please keep asking them, and I will direct them to the speakers towards the end of the session. So ladies and gentlemen, with that, without any further ado, I think let's get right into the discussion. And let's start with the conversation. And I want to start, Nabil, with yourself. Within the ICD, you have a very, very unique role as an organization where you're looking at the development of many different countries, many member countries, all of them, at different stages of their economic and social development. And you have a unique mandate in that you are meant to support the Islamic finance sector within those markets. So what do you see as the short, medium, and long-term impact of this pandemic on the broader economy and on the Islamic banking industry in many of the different regions and markets that ICD supports and works with?
Assalamu alaikum, and thank you, Adil, for your question. I would say as ICD, we are basically operating in 55 member countries, and our main role in ICD is to support, as you rightly said, the Islamic financial institutions operating on those 55 member countries. As you've highlighted in your introduction, what we are seeing in the global economy and and our member countries are part of the global economy is unprecedented. It's something we haven't seen before, something not even the most even the black swan theorists have not thought of this coming, and we in ICD is committed to supporting our member countries. As IDB Group, we have announced a $2.3 billion package, COVID support package to our member countries, and in ICD we have part of that, a $250 million COVID package. We call it COVID package to support our member countries, and basically we haven't seen any liquidity kind of issues within the member countries we operate in. I mean, the banks that we either own equity in, or the banks that we call them our partner banks that we deal with, we haven't seen. I think there is kind of people being extra cautious, but there is no liquidity issue per se. I guess the central banks across the globe, the development institutions like IDB, like the World Bank, IMF, Asian Development Bank, African Development Bank, I think they preempted what started as a health crisis and evolved into an economic crisis, put it that way. I think the measures that the global central banks and relevant development institutions have preempted this and have, put it that way, supported the economy with all it takes, like liquidity, ease of ratios, delay of payments. So I would say if those measures were not being taken on time, then would have been a bigger economic problem.
No, that's a very apt point, Nabil. And I think, probably it's very interesting that you say that, across member countries, you did not see any institution facing a liquidity issue. And I think, it's probably one of the few, crises that the economic crises that we can think of where liquidity was not a major issue. And I think that goes to the work that was done by the governments and by the central banks. Mohammed, from your side, from your viewpoint in Kuwait, obviously, you operate with the largest Islamic bank in Kuwait. Do you share Nabil's sentiments that there was, as the economic crisis came through, there was no liquidity crunch or liquidity squeeze, and that was primarily due to the support that governments and central banks provided?
First of all, thank you, Mustafa, for inviting me here, and I would like to thank the attendees and your guest as well. As for your question, yes, I share the same view as Brother Nabil. Thus, the liquidity is the short-term impact of the pandemic. And there are three reasons why this liquidity didn't affect, or that liquidity shortage didn't appear in the system. First of all, is the swift action from the central banks across the globe. It wasn't only in the size, it was in how fast it was. This is something we didn't see in 2008 when it was take months till the central bank react strongly. And that sent a message to all the investors or all the depositors that the system will not, they will not allow the system to fail. Now, the second reason that we should take and discuss as well is the Basel III regulation that is in place, which is not, it wasn't in 2008. The situation that most of the banks are well capitalized. Most of the bank has really strict liquidity ratio that they should keep within. This has helped a lot these banks to absorb the shock. The third one is because of 2008, the risk departments in all the institutions across the world has been increased by folds, and there is a big control from these departments across all the bank activity. This culture wasn't there before 2008. These three reasons are the main driver to cover the impact of the short term for the pandemic. There are a long-term impact of this pandemic that we didn't see yet. And this is something which is not an liquidity, maybe it's a credit worthiness of the papers around us or a profitability issue as well, inflation effect as well. These things that can come through next year or in the end of this year as some of the expertise expected. Please, Mr.
No, thank you so much, Mohammed. And I think it's very interesting. I think, the three items you mentioned, the central bank, Basel III, and the risk management controls, it seems that this is the first crisis that we've actually learned from and we've actually addressed, to make sure that we're more resilient. And it's very good to see that, we've tackled the short term. You touched on a very interesting point about the longer term impact on profitability, on asset quality. And I'll come to that in a little while. I definitely want to dig deep into that one. But Hussein, do you share the sentiment that was presented by Nabil and Mohammed regarding how the Islamic banks manage the liquidity, at least the short term shock of the crisis?
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Thank you very much, Mustafa, for making me part of this distinguished and seasoned bankers in terms of guests. Yes, I totally agree with both of my brothers here. We with this pandemic is something that we haven't seen in our lifetimes. Having said that, the actions that was done by by the central banks, under the SWIFT actions actually that was done by the central banks was played a major role in basically helping us weather at least till now basically to the pandemic. As an example, I mean, in the global financial crisis, roughly a decade ago, the amount of stimulus that we saw, at least from the United States, for example, today we saw 10-20% of the United States economy being monetized, and that kind of a support package basically that was unleashed into the markets, and we still continue to see big bills being basically debated within the Congress in the United States for the same reason. Now, coming to the region, obviously, the region is a commodity-driven region. The sell-off of oil that we saw last year obviously had challenging repercussions on regional governments and ourselves. But having said that, the support again from the governments was swift, was timely. At least from within Bahrain, we saw that we were from the wise leadership all the way to the regulator, all the way to our boards. We've seen the government basically support. The government support package was roughly around north of $11 billion, which is roughly around 33% of GDP. We've seen the central bank basically relax ratios to help banks to weather that. The opening of the taps of the repos with the central bank at 0%. The other support packages that the government was waiver of business, municipal fees, touristic fees. We've seen the deferment of loans on the private and corporate sector, insured private and corporate sector basically. There was also obviously the waiver of, let's say, the electricity and water utility bills. There was a huge increase in the labor fund basically that the government, which was part of the government's initiative. I think this whole package, and the timely actions by the government definitely help us, at least in the Bahraini economy, to weather this so far.
No, Hussein, I think I completely agree with your sentiment. And, being based in Bahrain, I was able to, also see the proactiveness of the government and what they did in terms of supporting the economy, which was, unprecedented as well. You touched upon two very interesting points. One was regarding us being a commodity-driven region. And, I think as we look to the medium-term and long-term impact of the crisis, I think that would have, a knock-on effect on our regional recovery, which we'll talk about, and also the deferment of the loans, which you mentioned in passing, but I think from a treasury perspective, from a liquidity management perspective, becomes a very significant consideration for Islamic banks. So we will come back to that as well. But I want to bring Anna into the conversation and really get a perspective of the Southeast Asian experience, right? And obviously Indonesia being, the largest, Islamic country and a major economy. What was the experience and impact of the COVID crisis on the broader economy out there, and also the government support that was provided, and the general impact on Islamic finance? Anna, would you like to share it?
Hi, Mustafa. Thank you. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. Thank you, Mustafa. I think I agree with Nabil and also with Muhammad and Hussein. Yeah, it's the same thing. I think in the Southeast, because the pandemic is all around the world, but we cannot blame the pandemic, right? Because it's all over the world. And then for Indonesia itself, in the short term, in ASEAN especially, the pandemic is also brought intermediate disruption in economic and then economic activities across the region, of course. And then we also have imposed for the lockdown and then the community quarantine that we have to stay at home is also like we call it a new normal in economic and also in our life, because we have to work from from home, and because usually we go to the office for work, but now we at home to work with the office thing there. We have to stay at home orders, and then the temporary business is a closure, especially for the banks. Yeah, it's impact much on the bank especially. And then for travel restrictions, and then the prohibition to contain the virus, and then all the things about the pandemic. Yeah. So in Indonesia itself, the government is support, especially the banks, support with the relaxation in the loan, especially for the loan with the SME and the retail as well. So and in Southeast Asia, I think it's same thing. Yeah, with the it's also fall in the. As now we daily new cases is also is going down, especially because of the vaccine. Hopefully the vaccine is going well, yeah. So economic and also the bank operation goes well. And then for the, especially in Indonesia, yeah, Indonesia now GDP for the outlook for during the pandemic, the GDP is fall from now is from especially in 2020 is minus 2.2, and then now we hope that in next year, because of the vaccine, is 4.4 hopefully. Yeah, this one is we have for the World Bank. And then for the in liquidity, all the bank in Indonesia is the same, so we have flush liquidity because of the loan, because of the the outlet for the liquidity is much restriction. But government also in our authority of financial, and then the Bank Indonesia, our central bank, they also help us on for the responded for the pandemic impact. So with both fiscal and monetary policy since 2020 when the pandemic is start. So they also give us for like stimulus, we call it stimulus financing for more than 5 trillion rupiah. And then we also have like for now is totally is 405 trillion to help the bank to get the relaxation for the loan, the bad loan, yeah, the bad loan, and then also with the majorly for the SME and retail, Mustafa. So I think it's the same with the other speaker. The government is help us on this, and then we also have for the medium term. For the medium term, we hope that because of the vaccine, because now it's going start the vaccination for all the all the people in Indonesia. So we have the economic impact, like intensify of the stoppage in production, disruption in business operation, and also with restriction of the movement of people. We hopefully going down. Yeah, for they also can do with the business, and also they also can increasing the income for the workers, so they can do business. Then the banks is also can run the business as well. And then for medium, of course, now the NPL, the net for the bad loans now is higher, rise up, because the effect of the profitability and liquidity risk that we have for the bank also will increase in the longer term if the pandemic still like this. And then in the stock market, since the many company profitability is decreased, so it will affect the market volatility as well, as the capital market liquidity is going there. And then for the longer term, if the vaccination is not good, not efficient, then we have to help the government should help us more on the using the stimulus, not only for the 4 or 5 trillion, but I think it's getting more, because if the pandemic is longer, then it's not going to stop, it's not decreasing. So consequently, the country burden principal interest are getting higher. This will affect the government spending in the longer term, and also with our liquidity in the bank. And the most challenge for the company institution is, of course, the changes of the people behavioral. So we do for the digital, for the technology, and also we use to have the digital platform for the operational bank, especially for the customer. I think that's the thing that we have to do for now for the bank, they have to the digital platform to have or digital platform to do the business, especially for the customer side.
No, thank you very much, Anas. And it's good to hear that the sentiment is similar to what was shared by Nabil, Hussein, and Muhammad. And I particularly like your point about, the focus that the government has on the SME and retail sector, which I think has been the most badly hit, and also the support that is being provided to banking, the new normal that we have to work with. NPLs is something you mentioned, and I will come on to that as we go through. And, the digital platforms you mentioned, again, a very interesting topic for banks right now, but we'll see if we have time for that. Before I move on to my next question, I would just like to remind the audience, please submit your questions in the Q&A box at the bottom of your screen. I will come to the audience Q&A towards the end of the session, so please do share your questions. But Nabil, I want to come back to you, and I want to touch upon something that was alluded to by some of the other speakers, which is that, what is the new challenge that the Treasury is facing in the current environment, right? I mean, is it, what is the impact on asset quality or creditor, the quality of the credit that is being held, particularly because a lot of stimulus packages are maybe in some cases artificially supporting businesses that once the package is pulled may not be there. And also in terms of profitability, what is your biggest concern? Is it, asset quality? Is it profitability? Because obviously liquidity seems to be well supported by the government. That's not a challenge there, right?
Yeah, I think the main concern is the profitability. And I would say the profitability, keeping in mind the low interest rate environment that we are operating in, where we are, let's say, zero or near zero, and if thing goes as planned and the economy project restart works, we will only see interest rate increases towards the end of 2023. So you have another 3 years of a low interest rate environment, low to zero interest rate environment. So I would say profitability is one. The other one I would say is as a commercial bank or even as an investment bank, the lending growth. If you ask, I have my esteemed colleague here who work on commercial banks like Mohammed and Hussein and Sister Anna, they will tell you banks are I don't want to say facing difficulty, but they are concerned about the lending portfolio growth. So you have a low interest rate environment. Your treasury is flushed with liquidity because of the support, as you've highlighted from the central banks and the global system. And then you have the provisions that you need to provide in anticipation of a possible or default of SMEs or your existing borrower. So that's in itself, I think as you said, the liquidity is not as a concern at all because of the full support from central banks across the globe. The concern is my main concern I would say is their profitability and the growth of the assets, whether it's the loan portfolio or even if we look at just as a treasury, a sukuk. As an Islamic banks, we have let's say the liability is the customer deposit or issued sukuk by the Treasury. At the same time, our investment venues are very limited. We fund the corporate banking book or the retail banking book, of course, loans book, and then invest in sukuk. And last year this time, with the peak of the pandemic, banks were still issuing sukuks. And there was ample sukuk offered in the market. This year, there isn't much, because if you go to the issuer and say, would you consider issuing? He said, okay, I'll issue at a cheap price. I know the market is there, but what I'm going to do with the money? I'm already flushed with liquidity. I mean, where are the venues that I will invest my extra liquidity? That's my, again, I want to come back to the point and leave the floor to my brothers and sisters on the call. To me, profitability and the growth of my loan portfolio and the NPL, that's my main concerns, or provisions for the NPL, basically.
No, very interesting, Nabil. And you've painted a very, very interesting picture, which I think if you had spoken to anybody after the last financial crisis and said that the next economic crisis that hits, we will have excess liquidity, low interest rates, and not know what to do, they would not have even been able to fathom what you're saying. But here we are in unprecedented times, as you mentioned. Mohammed, let me come to you, and then Hussein and Anna. Do you concur with Nabil's statements? Is it about profitability? Is it the challenge of where you're going to deploy your funds, having a lack of, avenues to invest through? And then, what do you see about, your NPLs or providing for your NPLs going forward?
I agree with him, yes. And it is in general, Mustafa, everybody will agree that the profitability and the growth is a problem in the next 3 years, let's say, till the pandemic really will be over us. Now, to take this further now, we are as Islamic banks. We have the holy grain of Islamic bank is sharing the risk and the profit with the customers. And this is different than the conventional bank. We are in a better, I think, situation to face these, let's say, growth and profitability issues. Now, the other side of the situation is the asset valuation. Now, the structure of the current economy that is controlled by conventional central bank, they can print as much as they want. And this is a power that it's more than anybody in the world, that you have that much the power to create wealth and money, let's say. And personally, I didn't feel the fiat element of the money. My whole 17 years of experience in 2020, I felt the fiat money is just like a click and there will be trillions. Treasury, the Federal Reserve increased their balance sheet from 3 trillion to 7 trillion within months. That is 20% of the money supply of the dollar. That is a huge amount, and all the asset valuation will go up. Now, if I have liquidity, now the question, if I buy these assets, which I know is inflated, how that will affect in the future? Should I wait till this, I will not say bubble, but till this asset valuation go down a little bit? Or this is the situation will be constant for the next 30, 20 years, that the structure of the economy and the Islamic banks are part of this economy. It's like, I feel that we are an island of ocean of conventional economy. The printer, and just for your note, they don't use a print as a word. They never use a print. They use quantitative easing. If you think you will never see a complex word than a quantitative easing, doesn't mean it's very hard to I see you laughing. It doesn't, for me, it's years to understand it, quantitative. Then it's in the end, it's just a printing. Now, in this situation, that's, they have the power to print as much as they want. Okay, in any pandemic or any financial issue, are we creating a financial pandemic in the future because of this current economy structure? This is the question. And the question is, if we are an Islamic bank in this financial market, how can we overcome that? In my opinion, is the profit and risk sharing is the solution for this problem, which is we will face it in the next 10 years. This is one. The second is that our market is growing and we have more than 1 billion Muslims, or way more than 1 billion Muslims. And you know, the issue here is not about Islamic finance, it's about interest effect on the economy. This is the main, because, you know, I know some of the Western now economists that saying that the interest rate magical tool to create money, and, you know, to put just a deposit and that will create money. And really, I hope that Islamic Bank will stick to this statement, which is profit sharing and risk sharing. And I think this is the boat will be to go through the next, let's say, financial problems.
So, very interesting point, Mohammed, and I want to hold you there for a second on it. Like you mentioned, right? There's two avenues. When you have low rates, you have low return on investments, you can do one of two things. Either you, because there's liquidity available, you over leverage and you try to increase your profitability that way, but that creates an even bigger bubble. Or you go towards genuine economic value creation, which is the profit and loss sharing, which you mentioned, which is meant to be, you know, in line with the principles of Islamic finance, right? Now, do you think Islamic banks, and I'm not talking about KFH, I'm talking about generally, broadly, because you know the industry. Do you think the industry will move towards genuine profit and loss sharing where they can create economic value and generate returns that way? Or do you think they will, you know, under the weight of the tide of the conventional finance industry, shift towards, you know, overly leveraging and trying to generate profits in that way? If I could get a quick response from you on that.
Sure. If you go to any customer, Islamic Bank, and you ask him, you're putting money with Islamic Bank, what is the point of this money? Are you saving this money or you are investing this money? He will answer 90% and that we are saving. That means we are in the share profit as a concept. And this is, I think we should stick to it as Islamic bankers. But because of the complexity around us, this is led us to deal with Islamic derivatives. This has led us to the rise of cryptocurrencies. Why the cryptocurrencies there? Because the people doesn't live on the normal money.
Yes.
And this is what the art that now they call it NT something. They sold $50 million a tweet or something. This is what this is. A venue has been opened because people are not believing in the current system. Now,
yes,
this is my answer to you. That I don't know the answer really, but I know we are. This is not only just in the Islamic finance. This is the whole financial industry. We'll face the issue of this monetary policy that that we are in.
Perfect. Before I move on, Nabil mentioned that we will have a low interest rate environment continuing at least till the end of 2023. Do you concur? Do you think it's going to be longer or shorter?
In the current system, I believe that we will never have a high interest rate environment.
Again?
No. Unless we have really big, financial crisis. The structure of the market doesn't allow it. They can print as much as they want. They can actually issue bonds as much as they can. You know what the beautiful about Islamic finance? That you cannot issue sukuk as much as you can. Because
you have to have assets. You have to have assets, exactly.
In their situation, they can do whatever they want, you know. And this is create bubble in the end.
Yes.
The structure of the environment of the financial economy, they will not have a higher interest rate because always there will be
the interest repayments. Yeah.
Exactly. This is what.
Yeah. No, thank you. Fascinating, Muhammad. Hussein, coming to yourself and similar questions, right? We're talking about the impact of the environment on profitability, on asset quality, NPLs. Is that your biggest concern? And how, are you envisioning that Islamic industry should tackle the challenges of profitability and asset quality going forward?
Okay, very interesting question. Obviously, 2020 was a year that banks basically did a lot of cleaning, a lot of provisions were taken because of that, and looking into the future, 2021 and beyond. Obviously, with the points mentioned by the gentleman. Low interest rates as a financial institution, when you have a low interest rate environment and a flat yield curve, it's difficult for financial institutions to make money out of it. Now, recently we've seen the yield curve steepen, and these are benchmark rates basically that we tag ourselves for short end liabilities versus long end assets, right? So at the peak of the crisis, the curve was very flat. We just graduated, or we're just in the first phase of, let's say, or the second phase of the pandemic, and we just graduated to even putting assets on board. We will be selective naturally because risk aversion is everywhere. Going into the future again, we're going to be selective as I said. But having said that, there's a lot of quality assets that we could probably put on board. Whether it's government related entities, infrastructure spending. All these are basically on the table that you could look into and lock in your NIMs. So from a balance sheet perspective and a P&L perspective, I think banks, treasuries in general, should be looking at not only the asset side of the equation, but also on the liability side of the equation. So a simple example is that we, a year ago, credit spreads blew up. The differential in LIBOR OIS, went all the way to 130 basis points from, let's say, 10 basis points. Now it's back to the same old normal levels. And because of the credit spreads, widened, and we saw, a plethora of cash basically and liquidity being pumped, the people need to put that money to work, and as a result, we've seen credit spreads tighten now. It's come off. As an example, over here on the island, in a span of, let's say, 3 months, we've seen, the local T-bill rates come off by at least 100 basis points, and it shows the amount of interest that's there in the short term, let's say, assets that we have, or in short term papers, and we're talking about sukuks and the likes, short term ijara, short term al-salam sukuks. With these rates coming off, obviously, banks, Islamic banks, even within the island, will definitely have a relook at their liabilities, and being selective on the asset front. Basically, the repricing of both will help you basically maintain your NIMs, and basically, and that would translate into the profitability that we can be looking to. Back to you.
No, that's a very interesting point, Hussein, and I just want to press you on that a little bit, right? Particularly the mentioning about the yield curve, right? And as you mentioned, we had at one point a very flat yield curve. In some cases almost inversely, going the wrong way, that set off alarm bells about an upcoming crisis, and then slowly it's starting to rationalize itself, right? When do you think we'd get to a point where we would see a yield curve like we used to pre-2000, let's say 18 or 17, where it is, a normal yield curve factoring in maturity, factoring in credit risk, factoring in all of these things, and then looks normal, where, you generate higher returns or higher rates for longer term investments versus shorter term?
So, the answer to that, there are two answers to that. So one is that, let's not forget that countries like Japan, they've imposed yield curve control. So sometimes they wanted to stay low, right? The same, it's not happened in the United States. They have mentioned, but nothing has happened, or nothing has formalized. The question is that, once this uncertainty is off the table, obviously we could go back to having a steeper yield curve. It's steepened recently a bit, especially from the beginning of the year to today. But as we go, let's not forget the communique that's coming out of the Fed is that they want inflation to run a little bit hot above the 2% for some time before they could take any actions. Before they can take any actions in terms of benchmark rates. That could take a bit of time, or that at least gives the market a bit of a comfort in a way that rates could stay where they are for some time. And it's very important for us to just follow what the Fed is being communicating. Being in a pegged regime, and especially the region in general, we tend to follow more or less what the Fed does. With a few deviations sometimes, but most of the time we do tend to follow what the Fed does.
Interesting. No, that's very fascinating and very true in that we do account sometimes for the local requirements, but you have to be aligned if you have a pegged regime. Your point about Japan was very interesting because I think a lot of markets are now looking at the experience of Japan over the last 2 decades to try to predict what the United States and the Feds is going to do going forwards and how this is going to play out as well. So that's very, very fascinating stuff. I'm very mindful of the time. So Anna, let me come to you very, very quickly with the same question regarding, the concerns of profitability and the concerns regarding asset quality and NPLs. And in fact, we also had an audience question related to NPLs and how concerned banks should be and how much of an impact that might be as the government support starts to waver, as the economy starts to recover. So what are your views on that, on these 2 items?
Thank you, Mustafa. So before that, I want to comment with the Nabil and Muhammad. It's very interesting. One, that Nabil mentioned that we have to have a provision for the bad loan, for the NPL. And then the other way, Muhammad also mentioned that even though now compared to conventional, I think I agree with him, Syariah Bank now is more resilient. So because of the even though that now it's a pandemic, and I also agree with him it's not only pandemic for the virus, it's also pandemic with the financial. If the longer term that we have the pandemic, then will be also longer with the financial pandemic will also goes to us. And then I want to share with you that in Indonesia, in the banking sector, the asset with conventional and also with the Syariah Bank, in terms of the asset, for the Syariah Bank is really have increasing about 13%. But the conventional is only a rise only 6.73, and also with the loan, we also have the conventional bank is decreasing for 3.02. But in Syariah Bank now the loan is growing for 8.08 in 2020, Mustafa. So compared to conventional and Syariah Bank, we more stronger than the conventional, I think, because in terms of the asset we growing, and then in terms of the loan we also have a positive growing for 8.08, and then for the third-party funding also we have increased with 11.88. The other way, and the other for the conventional bank is only 10.9. So I think Syariah Bank is more stronger and also have a more resilient than the conventional bank. And also with the NPL is because of the the impact of the pandemic. So the repayment from the debtor, from the customer is also going down, right? So for this for the quality asset, then we have to get the provision. I agree with Nabil that we have to take the more provision on the loans, and also for because the NPL, I mean, like compared to the conventional with in Syariah Bank is also going up, but it's not more than the conventional bank, because the conventional bank is from I have the data here for the 2019 is 3.3 2.4, and then after that increase in 2020 is 2.99%, and then in the other way around is Syariah Bank. Syariah Bank is in 2019 is 3.2, but now it's still the same with 3.2. So it means that the NPL in the Syariah Bank is still same, yeah. I mean the same compared to the conventional bank. So I think is that we have to have to selective the customer in with also we have the other product is pounding in Bank Syariah Indonesia we have pounding. So I think the unique product that the other conventional doesn't have is pounding in Syariah is also growing much in this pandemic situation. Now we have the exposure now that we have is increasing for 4.0 trillion rupiahs. So I think it's good that we have to do the product, so to do the initiate a new product to cover the pandemic like phoning, and then we also have to have like a digital banking in the process of the loan. So in the digital platform, I think it's easier for them if they, let's say they want to have like a loan application. So the process will be easier and also faster. And then they also have the base that we have because the contribution of the fee base for the e-channel that we have now is contribute for number. I think it's a second key contributor now. And then after that, the impact for the liquidity because of the bad loans is also impact us because of the provision. I think that's the thing that we have to use the provision. They get more bad loan, then more provision that we have to prepare.
Sure. No, that makes a lot of sense. And in fact, Anna, that ties in very closely with a question that we got asked specifically for you and from the audience. And I want to move to the audience questions. And I'm mindful we only have 8 minutes left. So if we can keep our answers as brief as possible. The first question for you, Anna, is that what sector do you feel will be most impacted within Indonesia or Southeast Asia from an NPL perspective? What economic sector do you think would be most impacted? And very quickly, if your response to that.
I think the most impact is SME and retail.
SME and retail.
For Southeast Asia, mostly. Yeah, SME and retail, mostly in Asia. And then what sector that had because of the pandemic is, of course, the hotels, and then the transportation, and then travel. I think it's the highest impact, and the infrastructure. In Indonesia, the infrastructure is the biggest impact that we have.
Biggest impact.
Infrastructure, transportation as well. Yeah, especially for the airline transport. I think it's the same with the other countries.
Yes.
That the impact is like many like airplane is closed now because of the pandemic.
Yeah, I think it's similar. Yes, exactly. I think it's very similar sectors. And that's why government is directing a lot of their stimulus packages to support those areas as well. The next question we have, I think either Hussein or Muhammad can respond to that. What will be the impact on loans once the loan moratorium comes to an end, right? Once the repayments that have been halted restart, do you expect there to be issues or challenges or hidden defaults that will come out once the repayments start again? And I think Hussein or Muhammad, whichever one wants to answer, please go ahead.
Hussein, go ahead, please.
Mustafa, I mean, it's a valid question because for us in Bahrain, the first deferment was around 3 months and then extended to another 3 months, which is 6 months basically. Now, over and above that, people that have been, negatively or impacted with the loan still do have the window of coming and again negotiating, let's say, a deferment on the on their facilities. But again, with in line with whatever the bank is allowed to charge them. It's not the deferment now is not profit free, as they say. And it's natural because we've had a lockdown for such a long time. 3/4 of the 2020 was a period that we were in a lockdown mode. We still, at least within the kingdom, and then we just started to breathe a little bit once November came in place. Now we're seeing again cautious. Cautious steps being taken, and people are slowly trying to creep back to life, basically, as they say. So it's more of a lagging effect, and we need to weigh that in terms of what that is impact on your overall portfolio. Especially retail, which is a much more diversified portfolio. So I think that's. I hope that answers the question.
No, I think it does, and it is something that all of us are waiting to see. Like we said, right, the medium to long term impact of this on various sectors and various companies is still unknown, and we will go through that experience together, most likely. Gentlemen, thank you so much. I think we are running short of time, so and we do have a hard close at the end of the webinar. As we know, the delegates will have other commitments as well. But it's been a fascinating panel discussion. I think before I conclude, I just want to make one quick announcement. Or a couple of quick announcements. The first one is that a recording of this session will be shared with all registered delegates. So if you were not able to catch the full part, please do look out for that. We will be communicating that to you via email, so you can watch whatever you want. I would also like to ask the audience members to fill out a survey. Once they close this link, a survey will pop up. So please do share your experience, because that helps us to better improve the quality of our webinars and to make them more appropriate for you. So please do share your feedback. Your feedback is very valuable to us, and we definitely do utilize it to form and structure our future webinars as we go through. And lastly, I would like to also announce that Refinitiv will be launching a new product very soon, which is called Islamic Deal Connect, which is an automated post-trade workflow solution for Islamic treasury transactions. It completely integrates with our FXD dealing platform and connects to the commodity brokers platforms as well, and provides a straight-through processing of Islamic deals to the treasury management system. We already have DDCAP and IGER onboarded. For the commodity part, we will be having more systems coming up, and it also allows you to process Wakala and Mudaraba transactions, and also create custom fields so that you can do everything through a single interface. Please, if you're interested, please visit the refinitiv.com website, refinitiv.com/Islamic Finance, and look for the Sharia compliant trading solutions where you can get more information. Inshallah, we will be launching this in Ramadan. And with that, ladies and gentlemen, I would like to take this opportunity to really, really thank the panelists for being a part of our session today. It was a fantastic session, and I really enjoyed the conversation, and we could have gone on for much longer, so many topics that we discussed, but I think it was very, very invaluable. So thank you very much, ladies and gentlemen, for being with us, and assalamu alaikum. Inshallah, we hope to see you soon at our next webinar. Thank you.
Wa alaikum assalam.